Hello traders, today is the 30th of December 2012. The time in London is 10:09 a.m. In New York 5:09 a.m. The title of this video is Elliott Analysis and Market Forecast. Let's get started. We are looking at sell now, Epic Charlie Echo Romeo November American stock, okay, on a monthly chart. And we can notice that from April 2003 up to 2009 up to March up to January 2009, we have a one cycle. When we are talking about Elliott wave cycle, we are talking about 1, 2, 3, 4, 5 waves plus ABC correction. That's one cycle. I'm going to repeat this again. One Elliott wave cycle is 1, 2, 3, 4, 5 waves plus ABC from April 2003 up to 2009, okay, January 2009. For this stock, Cerner Corporation, Epic Charlie Echo Romeo November, we have one cycle, okay, 5 waves, 1, 2, 3, okay. The same thing you will see for many stocks that are American stock, many stock have the same pattern. So we know that there is a one cycle from 2003 to 2009. So when you are counting waves, especially on a monthly chart, you will notice that many stock will display this pattern, 5 waves from 2003, ABC from 2007 to 2009. Many American stock, you will see the same pattern. A new cycle has begun here, right here, in 2009, and that new cycle, we have 5 waves so far. We will expect the ABC corrective move. We will see what will happen. We don't know what the price will do, but we know what the price has done. When we are counting a wave, ladies and gentlemen, we want to look on the left-hand side to know what the price has done. We do not want to use the Elliott wave like a science or force the Elliott wave on the market. Very often we see the common Elliott wave mistake is that traders try to force the Elliott wave on the market. Traders will count 1, 2, 3, 4, 5 wave. They will place a trade to sell without waiting for a clear-cut sell signal. Or they will count 1, 2, 3, 4, 5 wave, and they will place a trade to buy without waiting for a clear-cut buy signal. Do not do that, okay? Do not do that. All right? When we count 5 waves, what do? We draw horizontal line. Ladies and gentlemen, repeat. When you count 1, 2, 3, 4, 5 wave, we will draw just a warning line. This is my warning line. So if I want to sell below my warning line with a clear-cut signal using TSTW24 or TSTWS008 trading system. If the signal has failed, I will come out. I will not stay there saying that because I count 5 waves, the price will definitely come down. Okay, don't do that. Okay, don't do it. So 5 waves. So market forecast. So how do we forecast the top? So now, the first thing that we do, as soon as we count the first wave and the second wave, right here, first wave, second wave, we want to know where the third Elliott wave will stop. Okay, so we join the low of the first wave and the low of the second wave. Then the second thing that we do, we draw a line from the top of the first wave, make it parallel to the line that we have drawn. You understand? So first, we join the low of the first wave and the low of the second wave. We draw a line with that 2 lines, which I'm going to color now into pink to draw the attention of beautiful ladies. Now we will draw a line from the top of the first wave, all right? And we'll make that line parallel, make it again pink, to this line here. You see now? So we have this channel ready. And the purpose of this is to forecast the top of the third Elliott wave. The next thing that we do, we see, no, in fact, we will move, because if the third wave is truly going to be the third Elliott wave, so to speak, it must at least achieve the length of the first wave. Remember, there is one market principle that we follow, is that when a wave fails to exceed a preceding impulsive wave, one should expect a turnaround after a corrective wave. I'm going to say this again. When a wave fails to exceed a preceding impulsive wave, one should expect a turnaround after a corrective wave. So, for instance, ladies and gentlemen, this is the first wave, this is the second wave. The first wave is an impulsive wave. The second wave is a corrective wave. So if the third wave fails to exceed the preceding impulsive wave, which is the first wave, one will expect a turnaround. We will expect the third wave to exceed the length of the first wave. So what we will do, we'll move the first wave here. We will say to ourselves, we are expecting the third Elliott wave to exceed, okay, the length of the first wave, according to the wave principle, which I just told you now. When a wave fails to exceed the preceding wave, okay, one should expect a turnaround after, okay, a corrective wave. Okay, so the second wave is the corrective wave. If the third wave fails to exceed the first wave, we will expect a turnaround. All right, so we will expect the third wave to exceed at least the length of the first wave, right here. For the bullish momentum to continue, we will expect the third wave to exceed at least the preceding impulsive wave. All right? Otherwise, the bullish momentum is stalling. All right? Okay? Language of the price. Okay? So, we draw the line parallel as the third wave is underway. We don't know how the third wave will go, whether we'll have a second wave that will be a complex second wave. We don't know. But if just draw a trend line here or draw a channel to cover the second wave, if you receive a valid, gorgeous bullish signal here, you will take it. All right, you will take it. The most difficult wave to count is the first wave. Trade it, but we show trader how to do it. All right, the guidelines. Look on your left-hand side, the guidelines. Okay, market pattern first. Okay, and then verification on the higher time frame to know whether what you are doing is correct. The higher time frame commands the lower time frame. Okay, so we draw these two lines. Okay, the peak lines. Okay, and then we project. We make a line parallel to the first wave. You see the first wave, they're parallel. So which I did now. You see, I move my first wave and I place it here. Does not mean that the price will definitely go there, but this is just a forecast trying to, okay, to position myself, okay, in case the price is doing exactly what I'm expecting. What do? I will take advantage of it. We will expect in normal condition or in normal third Elliott wave to exceed, okay, to go above the length of the first wave, okay. So as the price approaching this level, we'll know that it has a high chance. You see some traders sold it here. They sold. You see, pay attention to this candle here. See how the price dropped fast here? These are conservative traders. They took profit straight away here. They don't want a lot of mess in their trade. They took profit here because they know that some trader will be challenging and selling here. But after this candle here, am I talking to myself? After this candle, you can see that the price, they went down again. You see here? Went down again before going above it right here. So you may decide to take profit or stay in it until you give us some, or you know what you see. So this is how we will, okay, forecast. Does not mean the price will definitely do that. We want to know a bit what the price is likely to do, but we do not force it, okay. So the pink line is 2 pink line. That's how we know about the end of the third wave. There are other ways to know about the third wave, which I explained to traders at www.24elliottwave.com, talking about wave genius, okay? Moving on. How do we know? Can we forecast the end of the fourth wave? Attention please, ladies and gentlemen. We will join the top of the first wave and the top of the third wave, which I'm doing now, the top of the first wave to the top of the third wave. This time I will use a different color, turquoise. Sorry about that, ladies. So here we have turquoise, the top of the first wave, top of the third wave. And then, ladies and gentlemen, we will draw a line from the low of the second wave parallel to my turquoise line. You're following me? Attention please, because we can't make this video too long. Alright, so this is a new channel about practical Elliott wave trading, learning to use the wave principle like God himself. Alright, I hope you like that. Alright, okay, so we make it parallel. That's how we will project, we will know, estimates, okay, the end of the fourth wave. Remember, the fourth wave can be a complex wave, so do not just place a trade here to buy, because the fourth wave can be A, B, C, which means you will dip, it will come here, and then go up a bit, and then dip below, and you'll be saying to yourself, George, your video is completely nonsense, I'll just go down and mark it down. Don't do that, okay? Don't try to, okay, go ahead of the price. There is a high shot of the price may turn around here. So as you draw these two lines, what you can do, ladies and gentlemen, is to, you see the second wave, yeah, move it and make it parallel. This point here from the top, you place it to the top and make it parallel to the second wave. This is the second wave. We place that line here and make it parallel to the second wave, all right, to have a kind of rectangle, as we have done for the first wave. So we will expect the fourth wave to roll it down to this line here. Does not mean that the price cannot break below it. The price can perfectly break below this line, which we D below it, retest it, and pull back a bit, giving us a kind of ABC or total retracement, which means some crazy new come out. This is what we are talking about. The trading triangle. Do not be a technical trader alone. Be both fundamentals, Google Finance, Yahoo Finance, and a technical and a news. There was recently one gorgeous setup for Marvel American stock, and recently there was some news, okay, there was some patent crazy news. Phew, the price went down, okay. So combine the technical and fundamental slowly but gradually, okay. Try to incorporate, okay, the fundamental with the technical, all right. If you are only fundamental trader, combine also the technical. That will help you. So we know how we can forecast the end of the fourth wave. How do we forecast the top of the market? The top of the market usually takes place at the end of the fifth wave. Now, this is very interesting because a lot of traders get into trouble here because as soon as they can't find where they want to sell, and sometimes the fifth wave can be extended. The first wave can be extended, which means first wave can be a complex wave, third wave can be a complex wave. We expect the third wave to be kind of complex wave or extended or abnormal, okay? And the fifth wave, sometimes you will see it, okay? Last buyers or smart money pushing the price to, okay, the very end, okay, to the best resistance level, okay? All right. So what I will do at this point in time, because I don't want the video to be too long, I will stop the video and I will post another video that I will call, okay, Elliott wave analysis, okay, market forecast part 2, and I will show you how we deal with the market top in the fifth wave. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders. Speak to you soon.